joining LinkedIn Live on um, I think 6th of July on Sunday morning, and some of you might be early morning or late night. But yeah, we appreciate that you joined this particular LinkedIn Live. I hope my audio is clear to you. If it is, then just put a thumbs up in the chat, and yeah, we'll get going with the amazing topic which I am really curious about, which is climate finance. We have Rajashree with us today, and she will be taking you through slides which we have prepared with a full of dedication, and she has put entire her knowledge from last 8 9 years, and that is going to be wonderful to hear. So let me introduce and let me share my screen so that we can see the slides and see the meet Rajashree. So hey Rajashree, hi.
Hi,
How
hi. I'm good. I'm good. Quite excited to be here, and I hope we have a good discussion. I'm sure
yeah.
climate finance is quite a hot topic right now, so many people would want to know more about it, and I'm happy to share.
Yeah, so let me tell you guys more about Rajashree. So she's a climate finance expert, and she's situated right now in Amsterdam, and she has over 8 years of experience in climate finance policy, research, and fund management. And she has worked across India, UK, and currently based in Netherlands. She's also a climate fund manager and who supports investment in climate infrastructure through a blended finance. We will get to know what is blended finance today and approach an emerging market. So let's see this emerging market, how it is growing through her, explanation, and we'll learn from it. Okay.
Thanks, Pratiksha.
Yeah. I have to share my entire screen. Okay. Um, Okay, so hi everyone again, and this is little bit about Sustainability 101 that we offer skill-based training program. Currently, there are many programs which we are coming up with CSRD framework, the upcoming new hot topics which we call them again GHG accounting and CBAM and carbon market, again SPTI target settings and many more. So we will be hearing today. We are interested to learn about climate finance. So let's talk about it, dive deeper in it. Rajashree, stage is yours.
Yes, thanks, Pratiksha. And thanks for the introduction. Hi, everyone. As I said, I'm quite excited to be here on a Sunday morning. So thanks for all of you also for taking time. I've been in this space for the past roughly 8 years, and I have had the privilege of working in India, UK, and now I'm based in the Netherlands. So, from climate finance perspective, there have been progress and events that I've seen from both emerging markets and developed countries' point of view. So I'll be talking through it from both angles. So at any point, if you have any questions, uh, probably I think correct me if I'm wrong, Pratiksha, but you can put it in the chat and then we'll take those up later after the discussion. So yeah, so we'll be talking about climate finance from different perspectives. Mainly, I'll try to keep it high level because there is lot of depth and breadth to this topic. So it won't be possible to cover all of it in 30 minutes, but we'll try to get as much a sense of it from what is climate finance, why do we need climate finance, who are the dominant actors in this space, and how much climate finance are they trying to raise or fund, and what are the different job opportunities in this space now going forward. So trying to keep it high level, but let me know if you have any specific questions. Yeah, next. Okay, so what is climate finance? So in terms of definition, there is a certain definition that UNFCCC, which is the United Nations Framework for Climate Change, it uses a definition of climate finance. Can we go to the next slide, Pratiksha? But
Yeah.
climate finance in general is viewed very differently from different stakeholders. So, one place where you might have heard of climate finance is in international negotiations. It's quite a big topic in the international negotiations for climate change since 2015 when the Paris Agreement was signed. And in that context, it refers to international climate finance flows which flow from developed countries to developing countries. So, in the international context, it has a very nuanced uh, meaning, which is flow of funding or investments or grants from developed countries to developing countries, especially to fund climate solutions. Um, Before 2015, when Paris Agreement was signed, this funding was mainly public funding, but since Paris Agreement, it is opened up and now it also encompasses private funding or any alternative sources of funding. So in the international sense, that is what it means. In the domestic sense, though, in the national context of countries, it can mean the domestic expenditure or investments that is done in on climate action. So it can be expenditure by governments or it can be investments from private sources. You may have heard that countries are developing their own climate finance taxonomies now. So it is also used in the domestic context, but um, internationally, as I said, it has a more nuanced understanding. Broadly, when we talk about climate finance, it can mean that it is local, national, or cross country financing from public and private sources or any alternative sources. But the specific use has to be for climate change mitigation or adaptation. So as long as different sources of funding at different geographic levels are being used for climate change solutions, it can be broadly termed as climate finance. So that is the definition that UNFCCC uses. Um, but yeah, different stakeholders, based on their political alignment, based on their sources of funding, they can use it differently. So let's keep that in mind when we go forward. Um, I really want you to keep this schematic in mind. This is a climate finance value chain, as we call it. So imagine like a red thread that's going across these boxes. So this is not just like one row or one column. The flow of finance can go from any box to any box. So as I said, like domestically or internationally, the geography can be different. Then the sources of funding can be public, private, or both. Sorry, there is a typo there. It can be public, private, or both. Then the financing is channelized through certain instruments, which can be grants, debt, or equity. Then it goes to uses, which is climate mitigation, adaptation, or it can be dual benefits. Some projects can have both mitigation, adaptation angles. And then we are talking about the ultimate sectors and projects where the funding is going. So when I said like imagine a red thread, so the value chain can be domestic funding, which is coming from a public source, where they are providing debt to a mitigation project in energy sector. So that is how the flow of funding might happen. And this is in general a good schematic to imagine how climate finance flows in the real economy or in financial markets. So this might be a lot of information right now, but as we go forward in the presentation, you'll see how this materializes in different contexts. So, but this is a good foundation to understand climate finance. Next. So in term when we say climate finance, as Pratiksha said, that there is a lot of confusion around this topic because it you hear a lot of terminologies, right? You hear ESG, you hear green finance, you hear sustainable finance, you hear mitigation finance, adaptation finance. There is so much of so many of terminologies that are thrown around, and sometimes they're used interchangeably in different contexts. But to understand climate finance, it's important that it is different in scope than all of these terminologies, and it is very specific to climate change. So when we imagine sustainable development as a broader umbrella under which all of these terminologies are hosted. And then sustainable development has social aspects, it has economic aspects, it has governance aspects, and it also has environmental aspects. So within environmental, then it can be pollution, it can be various biodiversity or nature conservation related issues. But climate finance will only refer to climate change mitigation, climate change adaptation. And then other environmental can fall under green finance. So again, keep this in mind. This is a good schematic that's presented by UNEP back in 2016. And anytime you want to uh, define or tag a project in your job, maybe that is this a climate project or not, or should this funding or financing dollar should be tagged as climate or not, then always keep this in mind, that in which bucket it is falling under the broader sustainable development umbrella. Next. I'll go briefly into the history of climate finance, because it's important to understand where this wording is coming from, and what it's also not devoid of its politics. So, if any of you have been following international negotiations, you must know that it's a very political topic, and it's been debated for the past 30 years. So why is it such a controversial topic? So this you'll find this anywhere on internet. You can just ask ChatGPT for history of climate finance. But just one point I would like to highlight here is 2009 Copenhagen Accord and 2015 Paris Agreement. So in 2009, in the Copenhagen Accord, is when the developed countries pledged $100 billion to developing countries for funding climate action. And this pledge was born out of a principle called common but differentiated responsibility. You might have heard of this, but this was a principle that was quite fundamental to how the climate negotiations were designed and conducted at the time. And that is why I also said that the climate finance funding was typically public funding at the time. That is how the term was being used. By the time we reached 2015, uh, uh, several governments realized that public funding is quite limited. It needs to mobilize private finance at scale, because climate change is becoming more and more prominent, and we are seeing the impacts very closely now. So we need to scale climate finance, and just public funding is not going to cut it. So from their perspective, they also brought in private finance and alternative sources of funding within the gamut of climate finance. So since Paris Agreement, the principle that is guiding this climate finance negotiation is now common but differentiated responsibility with respective capacity in mind. So whatever the country can do, they should do it. It's not just within the developed countries' purview anymore to provide climate finance. So that is when you'll see the countries submitting their own nationally determined contributions, the NDCs. That might be another term that you've used. So that is, the NDCs are based on every country's respective capacity of what they can do. So it's a slightly nuanced take now on what CBDR was, and that is when you'll see then different countries bringing in different sources of funding into the climate finance umbrella. So that is just the differentiation, and keep that in mind when we are looking at climate finance as a term broadly. And then since then there have been a lot of there's been a lot of evolution in private finance. The topic has like really blown up since then, and there have been green bonds, there have been different pledges by asset managers, asset owners. There has been talk of climate risk disclosures by TCFD. So all of the private finance evolution in terms of climate change then accelerated after 2015. So that was sort of like a pivotal point there. Yep, next.
Okay, thank you so much. This was really interesting. I think slide automation was not working. So, yeah, I think you can take this. They will put it in the chat. We can know the answers later.
Yeah. So just a quick question to see if the understanding is clear. So true or false? Does climate finance only pertain to real economic sectors like energy and transport, or does it also encompass financial markets and stock prices, bond issuances, that sort of thing? What do you think?
Yeah. So, you guys can let us know in the chat. Um, Whatever your understanding is, we'll discuss later. The next question is: sustainable finance is a subset of climate finance. I think this is the general, topic which we discussed. That is it a subset? Is it what it is exactly? So a lot of us have a doubt about it because I am also not from sustainable finance background. Mm. So yeah, do let us know in the chat box that sustainable finance is a subset of climate finance. What do you think? True or false? The third question is: climate finance is international and is provided by developed countries only, which best describes the statement above. As um we have already discussed this in a first slide, so yeah, you might have known about the answers. But yeah, it's not like it's depend on everybody's thinking, right? It's always true or what is the answer? I'm curious. So a lot of people are writing climate finance is a subset, so answer is false.
Right.
Let them
That's right.
gauge to what.
Yeah.
Okay, we can go ahead.
Okay. Okay. So, in this section, we are going to talk about why climate finance, because financial markets have existed for a long time, right? And we have been funding projects in the economy for a long time. So, then why do we need climate finance separately? Um, the broad answer is, of course, that climate change is one of the biggest risks that the humanity is facing in this century, and that has been um, put together by various risk reports that are done globally by insurances, policies, think tanks, you name it. In the past decade, many studies have shown that climate change is accelerating, and we are already seeing the impacts of climate change with increased frequency and intensity at global scale. So we really need to act now. That's of course, and I'm preaching to the converted here, so I don't need to tell you why climate change is important. But
Yeah.
why finance? So, I mean, many of you might be working in different um, fields related to climate change, right? Some of you might be in policy, advocacy, research, technology. There can be many different facets to this. So, but in the capitalist setup that we are in, we have seen that money is the biggest lever for accelerated change. Every time we have faced issues in the past, say 50 years or so, changing the sources of finance and funding have accelerated the change. So we have seen
Yeah.
that in terms of ozone layer depletion, the moment there were some incentives that were made to reduce the concentration of HFCs and FCs in the atmosphere, we saw change happening really at a faster speed. We have seen that we are seeing that now in defense context or wars context as well. Funding really changes the discussion around the topic at hand. So that's why finance is being looked at as the major lever which can accelerate this pace of change. That not to say that policy, technology, research, or communication are not important. I personally think that all of these have to work hand in hand. um, we have seen in the past couple of years the backlash for ESG and um, how certain investors are backtracking their pledges in terms of net zero or climate change. Um, so even if prima facie we see that investors are committed to this, as long as it is backed by strong policy support, as long as there is clear storylining, there's clear technological support or technologies that are financially viable, and there is clear research that is evidence based, finance is not just going to happen in silo. So all of it has to back the financial decisions. But once that is done, then the finance can really accelerate the change. So, in that sense, I think climate finance is important. Um,
Yeah.
Next. And it just to give some context of why climate finance is that we have established in, let's say, in many parts of the world that climate change is important. There's still debate going on in some countries, but if that is what we have established, then um, where is the funding going to come from? So that funding exists in some other pockets of the financing world. For example, IEA has estimated that we fund new fossil fuel production every year of close to 1.2 trillion. So that is still going on, and that funding still exists. So even if like half of that funding is diverted to climate change activity, that is going to really accelerate the transition. So in that sense, the funding already exists but it's currently in different pockets because of course the entire world is not thinking just about climate change. So we are going to need to think differently about how to either divert that funding or make sense of the priorities and keep it dynamic. But that funding exists, and that is why climate finance, the understanding of climate finance and why and how much is very important when we try to negotiate with the different actors in the financial market.
Swaroop,
Okay. So enough of the enough of the theory and background of it. Let's get into the action and who is funding climate finance. So I talked to you about different geographies and sources that through which the climate finance flows. So, but who are these actors? Who are these domestic and international actors and public and private actors who are funding climate change? Next slide, please.
is this a slide?
No, the next one. Yeah. So I've just listed some actors here, and on the public side, you might have heard many of these names. For example, different governments, export rating agencies, multilateral climate funds, national DFIs, bilateral DFIs, multilateral DFIs. These are all the actors that have really uh, understood that their role is is very critical in the climate change domain, and they're really putting efforts. But on the other side, on the private market as well, since 2015, a lot of the private actors have come into um, funding climate change. So we are seeing multiple initiatives that are bringing in retail investors or households and individuals into the space in terms of crowdfunding or like stock markets where retail investment is also done. There are corporations which are funding their own climate initiatives either through new products or through supply chains. There are institutional investors like pension funds, insurance companies who have pledged for net zero, or now they are also thinking of adaptation, and they're also bringing in private money. The money by institutional investors is managed by some asset managers. So that can be private equity funds, venture capital funds, or mutual funds. And they are also bringing in their own new products. And of course, there are traditional banks and commercial financial institutions. So all of these actors within the traditional financial market, they are also now thinking of the climate lens and how they can tweak their products to suit the needs of climate change mitigation and adaptation. So on the right side here, on this graph, you can see how these different actors are placed in terms of their public and private nature, and in terms of their domestic and international flow. So it's just a way to classify these actors. Every time you see a new actor in the financial market, I think this will be a good scheme to put it. Like, where does this actor fit in this graph? And then you will be able to analyze what might be their motivations to do this kind of work, and what will be the nature of their funding. So is it going to be a grant? If it's a public sector actor, then likely that they're going to provide some grant or concessional funding. And if it's a private sector actor, it is likely that they need some commercial returns. So when you place an actor on this graph, you'll be able to see their motivations and the nature of the funding that they're willing to provide. Yeah. Okay. Next up.
So this domestic flows
Yeah.
are which who funds in domestic?
So domestically means something that is being funded within a country, right, or at local level. So it can be a government, but it
Okay.
can also be a corporation that has, which is not a multinational corporation. So it operates within a certain country. So their funding will be spent just domestically. It can be a DFI or like a national bank which
Hmm.
has only the scope within one country. So that's what domestic means. And international, then, like I said, it comes with its own nuance. So again, when you're placing the actor, if you place it on the top of this graph, then you will be able to also switch on that hat that this actor is actually providing cross country funding. So it will then come with its own um, requirements, let's just put it that
Hmm.
way,
Hmm.
because it's a cross country funding. So you'll have to look at foreign, like you'll have to look at risks differently. You'll have to look at funding mechanisms differently, because different countries are being involved. So everyone's tax structures are, for example, different. Everyone's requirements of how much foreign
Yeah.
funding you can give or take is different. So all those nuances come in place. But in
Really
domestically, it's more standardized. So,
correct. Really helpful. This entire slide really gives idea that why both public and private actor plays in this role and what kind of a role they have played. This graph is really nice. Thank you. Okay.
okay. So we just briefly ventured into this topic of how climate finance is being funded. So we now know who is funding it. There are different actors in public and private space, and there are different actors which are funding domestically and internationally. But how are they doing it? What instruments, what mechanisms are they using? Don't get too uh, like overwhelmed by the terms like instruments or mechanisms. These are just financial terms, but in most cases in even in your domestic life, personal life, you've heard the terms of like loans or shares, stocks. How it now even personal finance is quite common, so just try to find equivalent of what's happening in the climate finance world with your personal finance example. So I'll also give some examples now, but if you have questions, please feel free to put it in the chat. So we'll look at public financial instruments first. Of course, there's grants, which is a public financial instrument, which means that uh, there is no expectation of a return when somebody gives that money. So, in our personal finance terms, we have heard the donation sort of word. Um, it's similar, but grants are at bigger scale, and they're not donations per se. Because grants come from taxpayers' money, so um, it's in a way earmarked for certain use. So those monies are meant to be used for development and the well-being of the population and citizens of the country. So um, it is that is the use of government grants or national funds. It grants are also given internationally through aid or bilateral and multilateral initiatives. Sometimes they also take form of taxes or subsidies or other fiscal instruments like incentives for certain projects. So, for example, we have seen carbon tax or we have seen renewable energy subsidy by government for like solar manufacturing or something. So those are also versions of grants that the government is giving. So that is a very commonly used public financial instrument, both domestically and internationally. Then we see loans. This the other word for it is also debt. Um, for example, debt for swap is a very is that is being used in international financial markets for many years. Now we are using it for debt for climate swap. You might have heard that term. So, what is a debt for climate swap? So, basically, countries borrow, right, to spend domestically for their development projects. So, countries borrow from World Bank, from IMF, and then there is a fiscal deficit that happens in a country. These are all macroeconomic terms which you might have read in the newspapers. So when for a developing country or a least developed country, when that debt becomes too much, that the country doesn't have the capacity to pay it back to the lending organization, the lending organization sort of says that, okay, I will write off this debt, which means I'll let go of this debt if some portion of it you promise to use it for climate projects.
Okay.
That is what a swap is, that you swap the existing debt for climate funding. And then there are a lot of like small islands or developing countries which are very rich in natural resources and which have large forests or which have large oceans which are very biodiversity rich. Um, so those climate relevant resources need to be conserved. So that's why this debt swap happens. But it's basically a form of loan. Then you've seen equity. So you've seen equity in your personal finance as well. You buy stocks or mutual funds or shares. It's the same thing. It's just that public money is being involved. So there is not expectation of the same return that you'll get from a market. And then there are guarantees. So guarantee
Mm.
is basically somebody is vouching for you that you will not default on your commitment. So so it's off balance of balance sheet funding is what it is called. Again, no need to get overwhelmed by it, but it basically means that it is somebody just guaranteeing for your repayment of the loan, and unless you default, that guarantee won't be used. It's as simple
Mm.
as that.
Good.
Yeah, that's public. And then in private, again, the same instruments can be used. So if a private individual is using his or her own funds, then it can be philanthropic grants, right? Again, there can be commercial loans and green bonds or climate bonds. That is also a form of loan. We'll see later how it is different from a normal loan. Then in equity, it can be private equity, venture capital, listed equity, and there can be other instruments like insurance or carbon markets as well. So again, um, just a slide where this is summarized, and you can always come back to this and learn. Okay, what is a green bond? I'm going to quickly go through this. I'm conscious of time now. So, what is a green bond? It's basically a loan, but it's broken down in small, very small parts, and then it many different lenders give you the loan instead of one big chunk of a loan. So if you get a loan from a bank, which is just one lender, then that's a loan. But if you want a really big loan and you break it down in many different small loans, and you ask from thousand different lenders, then it becomes a bond and it's traded on the public market, and different lenders have access to it and they can give you the loan. That is a bond in general. And what is a green bond? Then, in exchange of that loan, you promise that the use of proceed, the use of that funding, will only be for specific green projects. So you earmark that funding for green projects, and once you do that, the lenders are ready to take less return, or they're ready to give you the loan at lesser interest rate, which is again, like you might have heard the word yield, which is another word for interest rate in some sense. So that is what a green bond is: loan from different investors, which is different lenders, which is traded on a public market, and it has specific use of proceeds. And the expectation is that you will get a lower yield, or the lenders will give a green premium. So that is what it is ultimately. There are different examples. You might want to read about green bond issuance by RBI, which started in 2023. And now RBI also has a framework for sovereign green bonds.
Okay. Great.
Okay, so this is the last section. How much climate finance is needed? I will really urge you to read some publications from Climate Policy Initiative, which publishes these global landscapes and country landscapes for climate finance. So I'm going to have some screenshots here, but yeah, there's more detail in the report. So in 2023, we hit 1.9 trillion in global climate finance, which is for the first time, we have crossed 1 trillion in private funding. This, when you'll see this graph, you'll now be able to connect it to the schema that I had presented earlier. It is showing you the
Mm.
sources, instruments, uses, and sectors of funding, and how the flow is happening. Um, that is the current flow, but how much more do we need? Can you go to the next slide?
Yeah.
Yeah. But if you look at different studies, you'll see that even if we are at 1.9 now, we need to increase it 5 times in the next 20 years. So we need to go from roughly 2 trillion to 10 trillion per year um, by 2045 to 2050. So we need to increase it 5 times, which
Mhm.
is a big jump. But as I said, the money exists already in different pockets of the financial markets and economies, and we just need to find a way to set our priorities and meet these goals. Next, yeah. Um, when I say we need to increase it 5 times, the emerging markets and developing economies, except China, they also form a big part of these climate finance needs. So we need currently we roughly need 500 billion per annum just within the emerging markets and developing economies. So you see that the global GDP is roughly 1 trillion. So we you can see that this is a huge opportunity, and there's going to be a lot of work in this space going forward if we need to meet these targets.
Yeah,
Yeah.
correct.
Again, the share of adaptation in this is abysmally low. It's 4% of the total 1.9 trillion. So currently, only 65 billion is going into adaptation project. This is what is being tracked at least. So 4% of the tracked global finance is going into adaptation. So adaptation is going to be a huge opportunity for funding climate projects going forward. It's also the need, and the current levels are really low. So if you
What is dual benefit?
dual benefits is a project which has both adaptation and mitigation benefits. So it can be something like solar pump or solar irrigation, where you're also not emitting GHG, but you're also helping adapt to the local impacts by, um, say, increasing the livelihood of the farmers.
Great.
Yeah. Yeah, as I said, cost of adaptation is a lot higher than the current flows, so adaptation is a huge opportunity. Uh, Next, yes, and so far we have been talking about projects in the infrastructure or real economy space, but there's also big revolution happening in the climate tech space. So, in a lot of private equity and venture capital funding is going into climate tech. Um, I, in the last couple of years, there's been a slight dip in the climate tech funding because
Mhm.
of political instability, but it is
Okay.
going to pick up. That's my hope that it's going to pick up again, and there's going to be a lot of funding in that space as well. And the opportunity also exists in India because the current level of funding in India, even though it's been growing really fast in the past few years, as per government of India's estimates, it still needs to, I think, triple per annum. So that's on the next slide.
So it's mentioned that it goes into the several sectors that are directly and indirectly relevant for reducing GHG emissions. So basically, for hard to abate sector, mainly this private climate investment is going on.
So industrials is a small portion currently. You'll see that
Okay.
trans mobility sector is and
Hmm.
energy are getting a lot of funding currently in the
Correct, correct.
space. Yeah, but indirectly, industrial, food, fintech uh,
Fintech.
solutions is also getting funded.
Okay, correct. Hmm.
Yeah. And India, as I said, India is also really growing in its green finance space. I think the latest estimates we have is from 2021, 2022, and uh, we reached, I think, 50 billion on an average, which is still a very big achievement. But as per government India's estimates, we need to fund roughly $170 billion worth of projects. So it's going to grow three times. It should
Correct.
grow three times. Yeah.
Mm.
There are certain challenges and opportunities in the space. I'm going to quickly go through this now. Of course, there are always macroeconomic conditions like weak institutions or lack of governance structures and law enforcement, which always makes it difficult to implement projects. Especially in climate space, there is an issue of bankable projects, which means that the projects don't have clear revenue streams and clear financial
Mm.
returns. That has been sort of taken care of in the renewable space now, but all the other sectors are still facing these issues. In countries like India, we are still facing aggregation issues, which means that a lot of our projects are very fragmented geographically and also from funding point of view. So we need, like, there is no aggregation and there are no big checks and big ticket projects which international
Mm.
investors find interesting.
Okay.
And also there's inadequate measurement and reporting because there's no standardized data, there's no framework on how to report this,
Correct.
which is being addressed now by different initiatives. And in terms of
Nice.
opportunities, there's a huge opportunity in policy and regulation. Um, we need really strong policy signals that India is very serious about its climate finance intentions, and that's already happening. The government recently announced its draft climate finance taxonomy.
Nice.
There's been a lot of support in the renewable space, so it's already happening. But we need to also multiply the efforts in other sectors. There's huge
Correct.
opportunity in adaptation finance, as I said. There's opportunity in blended finance and innovative finance as well, because the conventional models of public and private sources, they're not really helping climate projects because of the challenges that I just mentioned. So you need to blend different sources and come up with a financing structure that is actually helpful for for the project, not just for the investor. So that is what blended finance is, and there's a lot of opportunity in green jobs and upskilling. Pratiksha is already doing a great job in that department. So
Thank you so much. I think it is necessary because now, as you said, it is growing and the new topic, this is the emerging topic. So, yeah, quickly let's answer this question in the chat. Was the share of adaptation finance in global climate finance in 2023? You can check online, but yeah, can you tell us the answer?
it is 4%, as I said, only 65 billion
Okay.
in the tracked 1.9 trillion is adaptation right now. Everything else is mostly
Yeah.
going to
So,
mitigation, which is renewable energy or mobility, transport, or
correct.
buildings and infrastructure.
Okay, so adaptation, as you said earlier in the slide, really a point to look at. Yeah, I think, and huge job opportunity exists as we need to scale climate finance, as she had said. So yeah, let's take this dive in.
Yes, so we just talked about different actors. So there are different job opportunities in the public, private sector, also NGOs, and academia and think tanks that are doing policy and research work, and multilateral institutions. So the role changes, of course, depending on the actor and where it is situated. So as you saw that graph, right? So
Yeah.
domestically, internationally, are you in the public or private space? That will depend on what the kind of work
Yes.
you're doing. And then
Correct.
um, the role and core skills also change accordingly. I'll be happy to uh, talk about it if people have any specific questions.
Yeah, we'll get them in some time. But yeah, ask us any question, and we are close to 1 hour. So 10, we can still talk 10 minutes. A lot of people are answering 4%. That means they have listened to you completely, and that is great. But yeah, there are a few questions. But before that, let me just share with WhatsApp community link if you would like to join. We have a GAP SCR session coming up as well. And this is the boot camp which we are launching. So we have launched already because you guys are telling us to bring this because the skills are really necessary right now as all the government are pushing companies to produce more data regarding this. So yeah, GHG accounting, SPTI, and mitigation targets, how to set that, and carbon market and CBAM. So do let us know if you are interested. And thank you so much for being with us. My slides are uh, yes. So we have a lot of questions in the chat, but a lot of people are appreciating you as well. Um, so let me just take a one question where so Devendra asked, how can climate finance be channelized to small producers? What I'm looking efficient and effective process of doing.
Okay. So, as I said, climate finance, it depends on the kind of funding you're targeting. So, if you, for the small producers, if you are targeting international funding, that is going to be a challenge because international funders will need big ticket projects because the
Hmm.
transaction cost itself of doing these kind of cross country uh, funding programs is quite a lot, and you need a lot of people to manage these sort of programs, and a lot of inefficiencies involved in that. So if it is about small producers, we'll need to look at domestic funders and domestic funding structures for it. That is what I think, because the more we think of international finance, the more large and complex and inefficient processing
Correct.
comes with it.
So this is the question from Aditya, who say, how do you build a career in green finance as an MBA graduate, and what is the route?
Um, Very good question, and I personally think that everyone is welcome in the climate change space. We need everyone to join. So it's not necessary that you have to do a specialized course all the time. Of course, once you're in the job, you can upskill yourself with specialized knowledge as your job requires. But it's not necessary that you have to do a specific degree. I've done two of them. So now I think I can say quite confidently that what you learn on the job is a lot different than what you learn in your master's degrees. So don't get dissuaded by the fact that you have not done a specialized MBA with sustainability focus. So even as a fresh MBA, even as a MBA grad, you can get into the space. How is um, it's you need to first think of what you want to do, like that is a question that every MBA graduate also asks, right? Like there's so many different fields that you can go into. So once you have decided on that, like once you have decided you want to go into operations, finance, uh, what else is there in MBAs? I don't know, I've not done it. But whatever is your specialization within that, it can be HR as well. Like you can talk about green upskilling in that. So once you've decided which what is your specialization, try to think of the green angle with that, and try to look at companies which cater to that. So it can be consulting, and then you can get into sustainability consulting.
Yeah.
But
The
yeah, one
last, the
yes.
last one is this the myth which we all ways fall into. Climate finance is a subset of sustainable finance, and people are saying so called.
Yeah.
Can
So that
you give us more idea about it?
so we talked about the umbrella, right? So sustainable finance is, or sustainable development is the broader umbrella, and then depending on what um, action you are taking within that, the financing is just a part of it. So within sustainable development, if you are financing uh, climate change, then it is climate finance. If you're financing climate change and other environmental objectives as well, then it is green finance. If you are financing climate, environment, social, governance aspects as well, then it is ESG. Um,
Hmm.
if you're just doing social, then it's social finance. If you're doing
Correct.
impact in some other sense, then it is impact finance. Yeah. So
There are
sustainable
different.
finance is the broad umbrella, and then climate finance is a subset of it.
Okay, we are getting too many questions, and it's really nice that people are really thinking about it. So let me take quickly. You can jump in for a second of thought of yours on this. So it's saying currently with large companies as well as few nations stepping back from their earlier climate pledge, what are your thoughts on ways in which climate finance can be enhanced?
Yes, very good question. I don't I can't pretend to know the answer for it because it's a very complex topic. But
Yeah.
I think globally, we are in a state of like an inflection point. Um, it's not just climate finance, but even in terms of like trade and all the other international issues, I would say the developing countries are realizing that they cannot be completely dependent on developed countries for their economic growth as well and for climate finance as well. We are seeing that in terms of the tariff wars that are happening right now. So, countries are looking at alternatives in and not concentrating all of their um, efforts just on the developed markets. That is the unfortunate state that we are in, that there is increased polarization. Um, so I think the more we think of it from domestic angle, and the more we start funding projects locally and become more sustainable and self-reliant in that, I think that is going to be the way forward.
So, last question. What are the key policy and market reform needed to bridge India's climate finance gap, especially for underfunded adaptation and resilience sector? Your thought? It's
Yeah, I think my take in that is the aggregation model, because if you look at adaptation and resilience, it is very closely linked with either water or agriculture. Those are the big sectors where a lot of the innovation and funding is needed. And both the sectors are very fragmented in India, or they are centralized but with the government. So, water, for example, is publicly funded, and anything else apart from government is very fragmented. Even in agriculture, there are a few large farmers, and then a lot of the rest of the farming is very like fragmented with small farm holders. So, in both the sectors, we really need to think of aggregation models and how we can make the scale bigger by bringing different actors in the space together. And then once that is done, then we can bring more standardization, we can bring more funding, um, and really fast track the process. So I think aggregation would be any policy or market reform that supports aggregation would be a big thing for adaptation and resilience in India.
Great. Thank you so much, Rajashree. You have been wonderful, and all the answers which you're giving. Thank you again. And yeah, we it's a time to wrap up. And again, this topic is very new. There will be a lot of questions which we can answer later if we are trying planning to do a workshop with you, which can really help people to get more knowledge about this. But yeah, thank you so much again for your time. Namaste and bye.
Yes. Thank you so much, Pratiksha, and thanks everyone for joining. It was a pleasure.
Yeah. Okay.